Welcome to EPS Momentum, the platform built for investors who want professional-grade insights. In this video, we'll break down a powerful tool, Earnings Momentum. It helps you find investments with greater confidence. The Earnings Momentum, or EM score. This proprietary measure ranges from -50 to +50 and captures how fast a company's earnings and sales are accelerating. The higher the score, the stronger the growth trend. Earnings momentum is a powerful way to assess the strength of a company's financials. It captures the sales growth of the company, then the net profit parameters, deciding on the earning growth, and then a very important metrics, the free cash flow of the company. It also quantifies momentum and acceleration in these metrics to give you an unbiased view of the financial strength of the company. A positive EM score indicates strength. Stocks with an EM of 20 or more are extraordinary. A negative EM score indicate companies that have no real earnings momentum and not worth chasing until the EM score turns positive. So it tells which stocks are safe options and which to avoid and are very risky investments. For retail investors, EM simplifies what analysts spend hours calculating. Instead of digging through income statements, you can instantly see which companies are ramping up profits. Imagine screening 1,000 stocks. EM score quickly narrows that list down to the top 5% with strong growth momentum. That saves time and points you toward potential leaders before the crowd catches on. Thank you for watching. Enjoy the platform. And don't forget to do your own research.